Well, it was another day on Wall Street that was not so good. Stocks falling, this while inflation runs hot and interest rates move higher.
What does that mean for your money, though, especially if you want to buy a home? Jack Royer joins us live. Jack, the housing market here already tough, but you have some guidance for buyers.
Jen, Keith, that's right. It all seems so confusing, doesn't it? Inflation, interest rates, those roller coaster rides on Wall Street. What does it mean for Tampa's already hot housing market? We spoke to a mortgage lender today to get a handle on that with the 3 things buyers need to know. In an era of Wall Street nosedives and rising interest rates, the economy can feel overwhelming.
The economy and the country have been through a lot over the past 2.5 years and have proved resilient.
For seasoned or first-time home buyers, new questions about how interest rates affect them.
There has been a slight uptick in the amount of inventory that's starting to come online.
Bob Sauerwein with Celebrity Home Loans says you shouldn't be freaked out by rising interest rates. Still at relatively low rates historically, he says buyers could actually benefit in the long run.
It is starting to level off. You may not have to go 20 or 30,000 or whatever above the asking price of a home right now. It's starting to level off a little bit.
So whether you're a seasoned buyer or a first-time home buyer, here are 3 things to keep in mind. First, make sure you work with a good realtor who knows the market you're buying in and understands the lending process. Number 2, make sure you find a lender that can shop around for the best rates. Sometimes if you just go to your bank, you might not end up with the best deal. Third, find a lender who will help you get fully approved in the financing process, not just pre-approved. That way your offer can compete with cash offers.
Ask questions like, well, after we buy a home through you, after we get a mortgage through you, what's next? See what they say.
He says a lender who has a long-term strategy for your loan is what you should look for. And higher interest rates for new loans could mean short-term pain for long-term gain in the market.
We are actually trying to help you with the biggest financial piece in your assets, which is your home that you're going to buy. So we use that information and we try to advise you accordingly based on your goals, where you want to be.
So he thinks these interest rate hikes from the Fed are actually going to have a good effect on the market and even out supply and demand a bit. But one thing homeowners should keep in mind, if you have a home equity line of credit, you can expect interest rates on those to increase as these federal interest rates do sometime near the end of this year. Live in Tampa, Jack Royer, 8 on your side.